Apple's latest earnings report hasn't settled the worries about the impact of tariffs on the company's future. Apple stock is actually down following the report, even though its March quarter revenue and earnings were a little bit ahead of Wall Street's expectations. The company projected that tariffs would increase its costs by about $900 million. That sounds like a lot, but Apple's a very big company, so that's only a very tiny nick on the company's gross margins. But the problem is Apple didn't say anything about how tariffs might impact the business beyond that point. Apple is moving a lot more production to countries like India and Vietnam. However, Apple still has a huge manufacturing base in China, and analysts are skeptical that the company can move enough production out of China over the long term to fully compensate. Apple's report came after what was relatively a strong earnings season for the rest of its big tech peers. Microsoft, Google parent Alphabet, all saw their stocks rise following their reports as the companies projected fairly strong business in the months ahead. And even Amazon, which does a lot of business with sellers in China, said it hasn't really seen any significant shifts in demand yet. And that's actually helping Amazon stock a bit. For Apple, all eyes are going to be on its developers conference next month. This is typically where the company shows off its new iOS updates and other features coming to its devices, and where Apple will have a second chance to talk about its efforts in AI.